I want to talk about something today that's been coming up a lot more frequently lately, especially with where home values are and the prices, what it takes to buy a house. So, this is not your father's mortgage. It's also most definitely not your father's mortgage insurance. You don't need to put 20% down to buy a house. You could actually do it with as little as 3%, 3.5%, 5% down, but you're going to be paying mortgage insurance. It's also known as PMI or MI, or for FHA loans, MIP. And you think, oh no. PMI. I don't want to pay PMI. Everybody says don't pay PMI. Well, for one, who's everybody? Let's talk about that. It might not be such a bad thing to pay PMI. See, MI is not the big bad taboo that it used to be. Let's take a look at it. About 10 or 15 years ago and further back, it made sense to avoid PMI if at all possible because it used to be pretty expensive. And then we got kind of creative in ways to get rid of the PMI or avoid paying the PMI back then. If you were to buy a house, say, close to $530,000 and put 5% down, you're getting a conventional loan. Let's just say it's a loan amount of $500,000 at that point. That loan would have automatically been $325 a month just for the mortgage insurance. Pretty pricey. About 10 years ago or so, MI companies, though, they started doing something called risk-based pricing. And what that means is that those people who have better credit, they're going to get cheaper mortgage insurance. Today, that monthly MI cost for somebody with great credit in that same scenario is only $120 a month on a $500,000 loan. That's a couple $100 a month lower than it used to be. Also, if there's more than one borrower on the loan, then the mortgage insurance is going to be a little lower than if there was only one borrower. Two borrowers means that the odds of a future default are lower than if there was just one borrower. And then the monthly MI drops to $104 a month in this scenario. Risk-based pricing. So mortgage brokers like myself, we also get the benefit of discounted mortgage insurance that not all lenders get. And it's due to the high volume that we put through our wholesale lenders, the loans that we do through them. This is for conventional loans only. FHA loans, they also have mortgage insurance, but it's not priced according to risk. And it's basically the same for all borrowers, no matter where your credit score is. So if somebody has lower scores, even if those scores are associated with what is still considered good credit, we're going to take a look at the FHA loan also and make sure, since it might make better financial sense to do the FHA loan because it has lower interest rates than the conventional loan. And there's a break point where the mortgage insurance can be cheaper than the conventional loans for some borrowers. The bottom line is you need to have an expert looking at all angles for you, and that's where I come in. So just call, text, email me anytime. Happy to discuss all the options with you, whether you're ready to move forward now or you just have questions. I'm here to help, so let's see what we can do to help you get into a house today. Talk to you soon.